I'm your host, Greta Wall. The major indices are all rising today ahead of this afternoon's Fed decision. The central bank is set to announce its first rate hike, or its rate hike decision rather, in 2 hours at 2 p.m. Eastern. According to CME Group, more than 96% of traders believe the Fed will hike rates this time by 0.25%, but a small group is still forecasting a 0.5% hike. The market is also hoping for more guidance on the bank's plans to begin its balance sheet reduction. And as that decision looms, new data shows inflation pressures squeezing U.S. consumers. Retail sales slowing more than expected in February. Census Bureau reporting today that sales rose just 0.3% last month to $658.1 billion. Now that missed expectations for a 0.4% increase, and it's not adjusted for inflation. Remember, the CPI jumped 0.8% on a monthly basis in February, which would more than wipe out the gain in retail sales. Now, excluding auto sales, retail sales were up just 0.2% in February versus 0.9% expected. But January spending was revised sharply higher to show a gain of 4.9% versus 3.8% originally reported. Now, in other economic data of the day, import prices did jump sharply last month. The Bureau of Labor Statistics reporting overall import prices rose 1.4% in February. Prices surged to 10.9% compared to February of 2021. Now, fuel imports led last month's gains, jumping 6.9% monthly and skyrocketing 53% annually. And oil prices are falling again today amid optimism over the war in Ukraine and concerns about falling demand. West Texas Intermediate crude futures are down about 0.6% today, hovering under $96 per barrel. Brent crude futures, meantime, are down nearly 1.4% at around $98 per barrel. Ukrainian President Volodymyr Zelenskyy addressed Congress today, asking the U.S. to implement a no-fly zone over Ukraine. He also called for more weapons to be provided to Ukraine, more humanitarian support, and additional sanctions against Russia. Now, his plea comes after he previously said talks between the two countries were making progress, and Russia's foreign minister said they were close to agreement on some issues. Now, the falling oil prices also come after the International Energy Agency cut its oil demand forecast for 2022. The group cited rising commodity prices as the reason for that slowdown. And Russia, meantime, is warning that it is in danger of its first currency debt default in more than 100 years. Interest payments are due on 2 dollar-denominated euro bonds that Russia currently holds. Russia's finance minister said the country does have the money to pay those debts, but it's available in foreign currency accounts. The U.S. and our European allies did freeze access to all of Russia's foreign reserve stockpile through sanctions at the start of the war in Ukraine. Now, Russia could attempt to deliver that payment in rubles, but the value of the ruble has plummeted amid these economic sanctions. And all electronic nickel trading was halted again today on the London Metal Exchange just after resuming for the first time in a week. The exchange had set a 5% up and down trading limit on the metal based on the last closing price. Now, prices did fall instantly as trading reopened, but a technical glitch allowed some trades to go through below that lower 5% limit. The exchange then shut down electronic trading in response and is investigating this error. They say all trades executed under the limit will be canceled. Now, U.S.-listed Chinese stocks are rallying today as Chinese officials vow to support those listings. The Golden Dragon China ETF is surging more than 27% in today's session. Chinese and U.S. regulators are said to be nearing an agreement on how to manage Chinese stocks listed in the U.S. The two sides did hold a financial stability meeting today. State media reports out of China say the Chinese government supports overseas listings of certain businesses, and the country's recent tech crackdown should also come to an end soon. Starbucks shares, meantime, are also rallying more than 7% today after CEO Kevin Johnson announced his retirement. In a statement, Johnson said he feels, quote, "this is a natural bookend to his 13 years with the company." Now, founder and former CEO Howard Schultz will take over as interim CEO, but Starbucks plans to find a permanent replacement by the fall. And before I go, let's take a look at the housing market. Homebuilder sentiment dropping to a 6-month low as labor and supply shortages squeeze builders. The National Association of Homebuilder Sentiment Index dropped 2 points this month to 79. Now that was lower than expectations for 80 and is the first time that the index has dropped below 80 since September. It's also the 4th monthly decline in a row. Sentiment about current sales conditions fell 3 points to 86, while sales expectations over the next 6 months plunged 10 points to 70. That's the lowest since June of 2020. Now, as builders are being squeezed by inflation and labor shortages, buyers are being squeezed by high mortgage rates. Data from the Mortgage Bankers Association shows the average 30-year contract rate jumped to 4.27% this week. Now that's up sharply from 4.09% in the previous week. The higher rates prompted a drop in refinance activity, with those applications falling 3%, and new purchase applications rose just 1% and were down 8% compared to a year ago. High home prices also pushed the average loan size to $453,200, which is the second highest ever recorded by MBA. Let me know in the comments how you're feeling about the housing market. More data is ahead to close out this week, so be sure to stay tuned for that. And also be sure you're subscribed to my daily newsletter to get all the details of this afternoon's Fed decision. I'll see you back here for the Wall Report tomorrow. Hit that subscribe button and the notifications bell before